The Kelowna real estate market just flashed a warning sign that most people are missing. Sales have dropped below last year's numbers, which were already historically low. In fact, one category just fell 24% year over year, and the buyer's market we've been in is getting even softer. And for a lot of condo owners, the situation is getting desperate. They can't sell, they can't rent, and they can't keep it. So here's what really matters. Is this the correction buyers have been waiting for, or are we heading into something worse? I'm going to break down the numbers across single-family homes, townhomes, and condos so you can see exactly what's happening and what it means for your next move. So let's start with the number of residential sales in the central Okanagan or Kelowna. Most of 2025, as you can see from the red line, was outpacing 2024, which isn't saying a lot because 2024 was a slower year, but as you can see over the last 2 months, sales have actually dropped below those 2024 levels, and we're now down in November 7.7% year over year from what they were this time last year. We're still outpacing 2023, and we are experiencing that seasonal dip in sales, which we typically see in the last quarter of the year. Going into the individual categories, single-family detached home sales were actually up 9% last month, coming in at a total of 133. Townhomes dropped 26% year over year, with only 37 townhome sales across the city, and condo sales dipped 24% year over year, with only 75 sales last month. I mentioned that sales are still historically low, even though they seem to be a little bit better than last year. And if we look at the graph, which shows the year-to-date sales from January to November every year over the last decade, 2025 looks like it's on pace to be a better year or to have more sales than the last 2 years, but it's still historically low from what we've experienced over the last decade. I don't think we're going to see those 7,000 sales like we saw in 2021 again anytime in the near future, but we are still experiencing a slower market than we've seen any year over the last decade. And if we look at the residential inventory, it is up slightly year over year, and we're sitting just under 3,000 available listings across the market. Every year we do have a seasonal decline in inventory as some sellers choose to either wait till the spring to list their homes or just simply take them off in the last quarter of the year, especially in December. If we look at that inventory over the last decade, and the blue line shows us a 10-year rolling average, inventory is still significantly higher than it has been at any point over the last decade. We're seeing every year that seasonal dip into the fall, but I want to pay attention to the peaks because that shows us what the inventory was in the middle of the year, and you can see that 2025 had more inventory than we've seen any time over the last 10 years, and it's significantly higher than it was during the market craziness of 2021 and 2022. Moving on to benchmark prices, we always start with the composite price because that tells us what the market is doing as a whole. Over the last few months, it had started to dip, but there was a small recovery in November, but not really a significant one. It did stop the decline, but it was more of a lateral move from October to November. That price is still down 14% from the market peak though, and we're basically back to the price that we were in October 2022 at the end of the last market correction. If we look a little closer at what this composite price has done over the course of 2025, it basically has been dropping since the spring. We were just over 800,000 in July, and now we're down to 787,000. It's also below where we were at the start of the year when January was right around 800,000. Moving on to the benchmark price of a single-family detached home, in November that price came in at $1,021,000. That's down 2.4% from the previous month. And if we look over the last year, that price is also down 2% from where we were this time last year. Taking a look at the bigger picture and the benchmark price graph for single-family home over the last 3 years, that price is down 16% from the market peak and is basically back to where it was in September of 2022, which was kind of the bottom of the last market correction. It is down $70,000 from where it was in the spring, and outside of 1 month, it's actually been declining every month since June. Going out over the last decade, yes, that price has, doubled from where it was in October of 2015, but prices are back to pre-pandemic levels or where they were at the end of the last market correction. There certainly hasn't been as much market appreciation as we saw in the 3 years leading up to the pandemic. Moving on to the townhome benchmark price, this price jumped nearly 7% month to month from October to November, where it came in at $752,000. There was so few sales in this category in November, I'm not sure that that's a direct representation of what's actually happening in the market. This price had been kind of going down over the last few months. But if we look out over the last year, it is up 3.6% from where it was this time last year. The graph tells us that there's been a lot of volatility month to month in the townhome market, and we kind of want to look at some trends. Since June, the price has actually been going up in townhomes in the Kelowna market. It's up about $35,000 from where it was in June. There was a 1 month kind of bump down in prices, but looking at the bigger picture, this price is down 10% from the market peak. I want to keep an eye on this to see if November was an anomaly and if that was just a 1 month bump, kind of like we saw in July 2024. But we'll have to look at that next month and see if it continues to trend upwards or if that was just a 1 month bump. If we go back over the last decade in townhomes, these prices are actually back to the pre-pandemic levels as well, but they are up $50,000 from where they were at the start of 2024. Moving on to the condo market, prices in this segment of the market had been coming down month to month. In November, it looks like the price actually went up a little bit. It was only 0.7%, which amounted to about $3,000, but it did stop a trend of prices coming down 1 month after the other. Going out over this time last year, that price is up 3% year over year. At that $486,000 though, let's have a look at what it's done over the last 6 months. Looking at the graph, the price is down 12% from the market peak, and since June the price has been coming down. It's down nearly $30,000. October to November saw that decline slow down a little bit, but when we start to look at how much inventory is available in this segment of the market and how few sales they are, I do think that we're still going to see downward pressure on prices in the condo segment. Prices today are back to where they were in October of 2022, which was the bottom of the last market correction. Going out over the last decade, you see the price is back to where it was in November, pre-pandemic levels. It has doubled again over the last decade, but I'm more concerned with what's happening over the last 6 months in the prices here, and there has been some steady declines in this segment of the market. And speaking of inventory in this portion of the market, it did top out at 950 available listings on the MLS sometime in the summer this year, and keep in mind that doesn't include any inventory that's coming from developers. It has come down a couple hundred units over the last few months, whether that's from a few selling or some sellers just giving up on trying to sell their property and trying to find a renter to move into there to help them cover some of the costs. But this level of inventory is still very high historically, and it's going to continue to put downward pressure on prices. Moving on to the price ratio, this is the ratio that on average a home will sell for versus what the last listing price was. Single-family detached homes came in just under 97%, townhomes are at 97%, and condos are 96%. So on average, a buyer could expect a discount or being able to negotiate off of the list price anywhere from 3 to 4%. But there are still some sellers out there who will probably give you a better deal than that, depending on the situation that they're in. Moving on to months of inventory, in the single-family detached home market, we're almost at 9 months of available inventory. This is up from the previous month where we had 8 months of available inventory. This is a buyer's market, and we have to keep in mind a balanced market is anywhere from 4 to 6 months of available inventory. Fewer than 3 months would be considered a seller's market, and anything over 6 months of available inventory is considered a buyer's market. In the townhome segment, the available months of inventory has jumped to almost 11 months. This is a reflection of sales being down 26% year over year in this segment and should continue to put downward pressure on the prices. I know that it did jump up a little bit in the last 30 days, but that's more of a reflection of where the months of inventory were in the previous month at about 7.8 months. Having the months of available inventory increase in this segment is going to put downward pressure on prices again. And the same can be said in the condo market. We have 10 months of available inventory here, which is up from how much inventory there was available versus sales in the previous month. This is going to continue to put downward pressure on prices. The condo market just seems to have a lot of things working against it. So just to recap, across Kelowna, we have a buyer's market in every category. We're firmly in a buyer's market. We've been here for a couple of years. This is putting pressure on prices to come down. It's softening the market, and prices aren't going to appreciate again until we get closer to that balanced market. So here's the reality. This is the correction buyers have been asking for. Single-family homes are down $70,000 since the spring and have dropped in 4 of the last 5 months. Condos have 10 months of inventory, which means only 1 out of every 10 is selling each month. And townhomes are sitting at the same level. And with vacancy rates in the city over 5% and rents dropping across the city, rental investors are facing real pressure. If you're a buyer, this is your moment. There are genuine opportunities out there, and some sellers are desperate enough to really negotiate. A lot of condo owners who bought pre-sale units that are now just sitting empty just simply can't afford to keep them much longer. But if you're a seller, especially in those condos or in the townhome market, you need a strategy because waiting this out might cost you more than just selling now. The question isn't whether the market has shifted. It has. The question is, what are you going to do about it? I'm curious what you're thinking after seeing all of these numbers. Drop a comment down below. And if you want help navigating your specific situation, whether you're buying or selling, just reach out to me. I hope you make a decision you can feel confident about. Thanks for watching. We'll see you next time.